Hi, I'm Gary Blake, your real estate expert. Today I want to talk just a little bit about whether or not you should rent a home or buy a home. It's a difficult decision. Everybody has the dream of home ownership and thinks it's like the mecca of life, and I've made it when I own my own home. But there's a lot of risk involved with buying a home. Yes, if you simply look at the monthly payment, it's typically cheaper to buy the home than to rent the home. But I want to tell you a story about an older couple I knew. They were in their mid to upper 60s, never owned a home. They were renting a house. In the middle of the process, they were making an offer on this house. They got cold feet. They said, no, we don't want to do it. And I said, okay, fine, I understand. And I backed away. An older salesman in my office, who's very much a salesman, chooses to say, well, somebody's going to make a payment. They're making somebody's payment. It may as well be their own payment because they're putting money in their own pocket. And I said, that's great as long as everything works. But the thing you need to remember, when you buy a house, everything doesn't work. There will be problems. And I asked the guy, what happens when the sewer line collapses? And they have a $4,000 or $5,000 repair. These folks have no money. If they're a renter, they just move. They have a 12-month obligation. If their landlord can't give them a habitable home, they move. Or at the end of the 12 months, they move. So you have some advantages to renting in that you do not have the risk of having the huge repairs. If you're going to be in a house for a minimum 5 years, more likely 10, buying will end up being your better bet. But you need to make sure you have pockets deep enough to handle repairs along the way, because it will happen. Another thing to be thinking about is mortgage insurance. The total cost of home ownership is not principal and interest. Another story, I have a lot of stories. There was an older lady, she's 72, I think, looking to buy a house. An insurance,
Let's pick that up from,
I can go, yeah. Another thing to think about when you're looking at buying a house is the entire cost of home ownership. There's a lady that's 74 years old looking to buy a house. She has a family member who is a realtor. Quotes her the house payment with principal and interest only. The buyer wants to be at $500 a month. The agent tells her she can spend X dollars for a $500 payment. The problem is she didn't include property taxes or homeowner's insurance. So the family member was willing to put this lady in a house, and immediately the lady was going to be upside down from what her expectations were. So remember, you have to add in your property taxes and homeowner's insurance when you're figuring out your house payment. Another piece of that payment that a lot of people don't realize exists is mortgage insurance. Mortgage insurance is a great little scam where your lender requires you by insurance to cover them. It covers them in case you default. So all these homes in foreclosure really don't burn the bank as much as they burn the insurance company. If you are putting less than 20% down, you will be required to pay for mortgage insurance. If you do an FHA loan, they will take as much as half of your down payment straight up front for mortgage insurance, plus a monthly fee. So remember, when you're shopping for a loan, to look at the entire cost of the loan. Take the entire payment amount, include everything in that list, and add it up and compare it to other options. Usually, if you can put 1.5% more down and you have good credit, you can get a better loan through a conventional source and save money on that mortgage insurance.